Good morning, Wall Street winners. It is Tuesday, March 4th, the official day when the 25% tariffs between Canada and Mexico become effective from the US, and the 10%, but now 20% tariffs with China. Trump has boosted the Chinese tariffs from 10 to 20%, and China and Canada at this point have retaliated with retaliatory tariffs in a tit for tat kind of positioning or fight, which traditionally never works well for either country in those battles. But we'll see how all of this plays out. And we really don't know what Trump is after in terms of these tariffs. So we'll have to wait and see what he's actually attempting to use these for in his pending negotiations. Possibly of a new USMCA agreement prior to its planned renegotiation in 2026. Maybe he's looking to do something there. Maybe it's more than that. So we'll have to wait and see. But there's definitely some very, very strange things going on in the world right now. And I'll get to a couple of those in a minute. You can see across the three US indices, we are in the red. I'm getting to a point now where I'm actually thinking of selling off a portion of my holdings, some of which are in the red in an effort to avoid further losses, because I think that we're only starting to see the initial fallout right now. So I think it's time to uh, take some losses and wait to get back into the market. Maybe put that money into a money market fund and then wait to get back into the market when there's better stability around what's going on internationally. And so, to speak to that, what we're seeing here, if we look over at the Bloomberg news, we've got the Trump tariffs obviously having a huge effect. In US, Canada, Mexico, the car industry is one of the ones that is set to have the most impact on it immediately. They're saying that there are probably about 30 days worth of cars out there on lots. Not that people who have increased costs are running out, rushing out to buy cars, but some of these car purchases are planned as leases come due and or turnover or financing comes to an end. People have plans to just in place over 2, 3, 4, 5, 6 year periods, whatever their lease terms are, to get into a new vehicle. And they need those vehicles to get to work and to allow them to bring in income for the household. So, and there's then fleet leases and things of that nature for corporations. So there's about 30 days worth of vehicles, maybe another 10 to 20 in terms of goods in factories or available to be shipped to factories. After that, there is going to be just certain models that the car companies are talking about, the least profitable models, they're just going to stop producing. And the most profitable, they're going to continue to produce, but the cost of those, on average, they're predicting, is going to go up $3,300 a vehicle, which is a pretty significant jump. But it could be more than that, depending on how all this plays out. We're also seeing Putin agreeing to help Trump broker a nuclear deal with Iran. So now you've got Putin and Trump together negotiating deals, as opposed to Trump and the other, call them free world nations that we would normally work with, trusted partners that we would work with. Now we're working with folks we can't trust. But mind you, if you look at this from maybe a physics perspective, when you have two negatives, they often equal a positive. So maybe if you put two people who lie and are deceitful in a room, maybe you'll come out with a positive. That's just being optimistic and a little bit silly, but it's crazy. Israel warns that Hamas, it's not providing any aid any longer until Hamas comes back to the table and rethinks its position. So there's upheaval in the Middle East. You've got upheaval in China, with China now increasing military action or military exercises over in the Taiwan area. And now, after what happened in the Oval Office with JD Vance and President Trump and President Zelensky of the Ukraine, Taiwan is now thinking the US may pull back all support for Taiwan. And so they're now in a position of uncertainty and concerned over a Chinese invasion of their country. Then we've got the US pausing aid, so stopping aid to a country that they have been supporting for years and that they are almost going against their own values of freedom and the list goes on. Anyway, so that's stopping. The EU has stepped up. They're offering a $150 billion loan. So we'll be interested. That will be an increase and maybe stronger relationship between the EU, which is closer to the Ukraine, and does need to step up their spending on military and with their NATO participation. But it's just it's very, very uncertain times is I guess what I'm trying to say. And again, if we look at the futures, they're in the red, and I expect that they'll continue to be in the red throughout the week unless we start to see some type of resolution. If we take a look over here, crude has dropped down to 67.58. So it is well below $70 a barrel right now. Gold is popping because of the implied security around gold. The VIX is up close to 25, so 24.40. It's climbed a dollar, one, not a dollar, but 162 today. The NASDAQ is dropping. If we look through the stocks, it's just a sea of red in the pre-market across the board. Obviously, retail is going to get hit. And at some point, this is going to be a buying opportunity, but we are nowhere close to it being a buying opportunity right now. It's just a bit of a fool's landscape if you were to jump into this market for the long term at this point, because it's highly likely you're just going to continue to lose money into the foreseeable future as things continue to slide. We do have a few areas of green here in tech, which I find odd. This is in the pre-market, so whether they stick or not, Texas Instruments up almost $3.50, well, 355 right now. I don't think that's going to stick. Applied Materials up 5 cents, big deal. They're way down from the 180s. Nvidia continuing to slide, NVDL down $3. So the company that is at the forefront of AI is just getting crushed. It's kind of leading the demise here, which is again crazy when you think about it. If anything, consumer, not even staples, consumer discretionary electronics device manufacturers like Apple, where people are less likely to upgrade their iPhone or delay that purchase in the event of a recession or an economic downturn, that would be a company that I would expect would be losing a great deal of value. CRM is off, PanW is off, Micron, which is announcing shortly, is down in the 90s. You've got ARM off $10 yesterday and then down slightly today. AMD down under $100. Shopify after earnings was up in the 180s. It's down at 155. You've got Workday down at 254. Not actually that bad, being that it got up to 280 after earnings. But this is another example of my trading philosophy of when something pops and reaches a new all-time high, it may be a good time to take some profits. Maybe all your profits, maybe a portion of your profits. But if you did well in the first, call it 50 days of this year's market in 2025, and you had have sold, you would have some profits that you would have locked in. But if you had have just held those, thinking that that market was going to continue to move forward and move upwards, you've probably lost everything at this point in terms of profits. Now, you probably lost some capital as well, but you've definitely lost some profits. We've got Broadcom announcing after market today. It was down 6% yesterday, and then it's down 1% right now. So not, sorry, it says 2 days out for Broadcom. It's Thursday that it's announcing, not today. So that's it'll be interesting to see what happens at that point. But so much skepticism right now around even the talks of preventing chips from getting into China isn't working by the US. So there's going to be potentially more regulations around that that will have greater impact on revenue and earnings to these chip companies. Tesla, again, I'd expect Tesla will be less than $200 a share before June of this year. It dropped significantly yesterday, down again in the pre-market. A super solid company that really isn't impacted by tariffs. Meta, Facebook and Instagram owner, they're getting slammed right now. Although they've weathered it pretty well, but they have come off of highs up into the 700s. Even Alibaba, the Chinese e-commerce company stocks, getting hammered a bit, not nearly as much. They were actually pretty strong. Nvidia off $10 yesterday, down 440 right now in the pre-market. I mean, it's just overall pretty ugly out there, even for companies that are far less affected. And then you get into financials, which again, less affected from a tariff perspective, but then the reverberations into the rest of the economy through the impact it has to businesses or consumers, those individuals or entities not being able to fulfill their financial commitments, maybe defaulting on loans, defaulting on mortgages, defaulting on car payments, all having a reverberating effect, and these stocks dropping. So um, looking at these, I mean, the other day Goldman shot up $20. Now it shot down $20 uh, in around the 605 area. I think we're going to see a further slide in tech stocks as well as we move through this, not even an economic cycle, just I'm going to call it a change to the world order. Ray Dalio, the founder and I think now chairman, I don't think he's CEO any longer, of Bridgewater Capital, very brilliant man, and obviously super successful in the financial market space. He's written a couple of great books. He's got a new book out now, but I think his first book was called Principles, and he's got some videos on YouTube as well. And they talk about the changing world order, and he goes back and over history analyzes how different nations have been the leaders of the new world order, and normally that comes out after a war, you become the leader of the new world order. But right now, we haven't had a global war, thank goodness, but we're having an economic war. And this is what I think Donald Trump is putting us into, as opposed to a physical war or a traditional military driven war. We're being forced into an economic war globally. And the outcome of this, the winner of this economic war, will ultimately be the new world order leader. So an interesting video to watch. It's about 30 minutes. He does a great job in it. Highly recommend it. Recommend the book Principles as well. So something to check out if you want a little bit more detail on the upheaval we're experiencing here. And then another great book is Currency Wars. And Currency Wars just talks about how different currencies and different trade policies are used to influence the economy and the profitability or success of different nations. Great book as well. Can't remember the author of Currency Wars, but he's written a couple of different books as well, and long read, but a fabulous read. Anyway, that's where we are today. I would be trying to go to cash at this point and put your money into a money market that has a guaranteed return and just wait out the storm. It does not look like we are anywhere near the end of this. And I think it's only going to get worse. So preserve your capital, take some losses. I know it's painful to take some losses, but take some losses, preserve your capital, get back in when the market turns, and you'll make that capital back in the long run. But you've just been in the market right now. If you've been in it, you're in it at an unfortunate time. And this happens every once in a while as economic cycles go. But as hard as it is to take your losses, you often come out ahead in the long run. And you've got a tax write off going into the next tax year. Good luck with your trades. Hopefully, you'll get out in a semi profitable position, or at least something that's manageable for you. And if you are in it for the long haul and have a 10-year horizon, certainly holding it, it will come back. But it's going to take a while at this point for this to turn around. So good luck in your trades. And if you're liking the videos, which I hope you are, please hit the like and subscribe button.